The global debt today is at approximately $256 trillion, but it was at only 87 trillion in the year 2000. Does 23 years look like a really long time to you? Well, it is just one generation of time, good sir. Tell you what, China went from looking like this in the year 2000 to looking like this in the year 2022. Now, all that change happened in less than one generation. That's a rapid change for such short span, just like the overhaul of debts. Is that bad? Well, to explain this, I had promised to talk about what if we erased debts altogether in my previous video, while giving you an insight into the reality of money. Hope you've given that a watch already. But I realized that to understand this, we need to first understand debts, if not thoroughly, at least topically. So here I am to explain to you about debts as if you're a 5-year-old. What is debt? Borrowing money from the future in order to cater to our needs of today. Why wait till retirement to save and buy a new home when you can get a mortgage and live in the house of your dreams today, or slowly paying off the amount with a little bit of interest? So you go to the bank, tell them that you want money and that you will pay them back with every extra penny that they ask for. They trust you and they give you the loan. Similarly with credit cards. Buy now, pay later. Corporations do it too. They have an extra additional facility that individuals don't. It's called bonds. They sell these to investors in order to raise funds. There are 4 known kinds of debts. Secured debts, where you place an asset such as land or property or gold as a take this away if I don't pay you back thingy, which is also called collateral. Unsecured debts, which is generally seen in student loans, where people are given loans based on nothing but trust and the person's previous borrowing habits, also known as credit score. Now these loans have really high interest rates. Revolving debts, more like credit cards, where you get to borrow a certain amount of money again and again and pay back later. The 4th is mortgages, used on buying homes, as you know. Here the take it away if I don't pay you back thingy, also known as collateral, is the house itself. By the way, did you know there is a difference between a loan and a debt? A loan is money that you borrow from an entity and then pay them back later, while debt is money raised by issuing bonds, on which the investor receives interest on a regular basis until the bond matures. How did debts come to be? The answer is simple: surplus. It always comes down to surplus with my videos, doesn't it? Not really. Listen, when agricultural revolution happened, for the first time people had surplus, and they had to store this surplus and account whose bag of rice was which one in the storehouse. And so they came up with writing and accounting of these surplus, which ultimately gave rise to currency. Now, when currency or money came to be, so did debt. Because you see, money or currency was simply a form of telling that the king owed a certain kilograms of grain for having worked in the field. If you don't understand what I mean, it's because you haven't watched my video on who invented money. Go watch. Well, that's the old form of debt. How did modern day debt system come to be? Well, that's an interesting story, but I will have to cover that in another video. So make sure to subscribe to my channel to not miss it when it comes out. For now, let's just talk about how does it work. Suppose you're a student or an entrepreneur. You go ask for money at the bank. When you receive the loan, you are basically looking far ahead at your future self, having the business up and running and generating profits, or being employed at a well-paying job. So, your current self simply takes the money from your future self and brings it to the present to use it now, to start the business or get a degree. Does the banker take money from the saver's deposit to give you those £100,000 loan you asked for? No, that's not how it works anymore. The banker simply types £100,000 next to your name and your account number. Understand this, there is just 3% cash in the whole world right now. Physical notes. The rest 97% of the money in the world is just electronic numbers. To know this, you should know how banking works. If you don't, I'll tell you how, but you will have to subscribe to my channel to know when the video is out. Now, when you get the loan of £100,000, banks then convert that into bonds and then sell these pieces of paper of worth £100 each to investors, who then receive recurrent interests on them. Corporations who want to raise money also do the same. Instead, they sell their own bonds. In both of those scenarios, you see, it's a win-win situation. You, as a borrower, get to start whatever you wanted, and lenders receive more money than they had initially invested, but later. This is fantastic for the economy, well, at least on paper. Because when you take the loan and start the company, you hire people who then go ahead and buy products from another company, which then produces more goods and pay taxes. See, in order to run an economy, debt is important. We have come to a point where everything around you exists because debt exists. Quite far-fetched. But governments know this and so use debt as pawns to run the country. They increase and decrease interest rates when need be, based on which people's intent to take loans depends. When the interest rates are high, they shy. When the rates are low, they don't take it slow. So what's wrong? Why all the fuss? There's more debt now than anybody can pay off. That's what's wrong with it. The International Monetary Fund said 60% of middle to low income countries are in debt distress. You might know of the Sri Lankan crisis. The country is in debt default along with few other small and large countries. People cannot afford food, shelter or clothing, such basic necessities, despite having large sums of money. Why? Because money no longer holds any value or as much value as it did before. Suddenly, a kilogram of rice costs more than your previous monthly rent. The recent global crises such as the COVID, the war in Ukraine, the Aramco fire and others have added to the burden. Yes, there have been measures taken to avoid this, like the Heavily Indebted Poor Countries initiative by the World Bank. Governments were helping out other governments, but it has gotten more complicated than this. The problem has branched out. The debts that governments of today have, it's with private creditors. You should have guessed by now when I say private, you should automatically hear profits. Think about it. Why would a private creditor be open to system restructuring when it can lead to less debt taking? These companies have been famous for filing for bankruptcy and then asking for bailout from the governments, and then immediately seeing an unprecedented amount of profits the very next year. Do they pay back any of it? No, why would they? It was never discussed in the first place. What happens if we continue on this path? When people truly believe that debt drives the economy and bankers were given unlimited freedom to type numbers into the system and create debt, they collectively disturb the future economic system. Students are taking loans for education but dropping out more than they did before, like we are seeing in the United States. They are then without skills and so unemployable, therefore cannot pay back the debts. People are taking loans to start companies to sell products that clearly won't sell, or services that clearly don't add any value, therefore go bankrupt and cannot pay back the loans. It happens when interest rates are dropped to low levels, which they did in early 2000s, and then again in 2008 after the crash. When companies shut down, people with jobs lose them. They then cannot buy stuff, which affects other companies that end up selling lesser and lesser products, leading to laying off their own workers, after which everyone is without income. Families cannot pay mortgages, so banks seize their homes, leaving masses on the streets, and suddenly, like we see in the US, we have tents on the roadside. People are taking loans to pay back the loans that they're already burdened with. When banks see more and more loans going unpaid, deposit holders rush to go get their money back from the bank, fearing that the banks are going broke too. To avoid the risk of losing all the cash, government imposes restrictions on deposit accounts, with maximum withdrawal limits and maintaining minimum balance, which restricts people from using their own hard-earned money. This leads to public outrage. People robbing banks to get their own money back, like we saw in Lebanon 3 months ago. If you haven't watched that video already, it's in the description box down below. Can this be fixed? Well, there are theories, and some of them have already been implemented and proven to be of great success in one of the countries that I've already mentioned in this very video. Did you guess which one? It is going to be a long discussion, so let me talk about it in another video. Subscribe to my channel to know when I upload it.